Good afternoon. Thank you for joining us today at Underwriters Marketing Service, your one-stop shop for all your fixed insurance needs. My name is John Countryman. I'm with the Life Department, and being that it's Life Insurance Awareness Month, we're really pleased to present Protective Life Insurance. Their life product is a full portfolio of products for all your clients' needs. Really proud to have Steve Galzowski with us today. He is the best internal that I have ever met in over 20 years. And he's been in the business over 20 years. So we're really pleased for him to take his time out and join us today. Remember, our webinar will be recorded. So if you prefer not to join us today, you can sign off. The lines are muted. If you have any questions, please feel free to enter them in the chats tab or the questions tab. Without any further ado, Steve, thank you very much for enlightening us today.
Well, thanks, John. I don't know about the best you've ever seen or talked to, but I appreciate the compliment. Good afternoon, everyone. I'm Steve Galzowski, as John said, internal wholesaler. ARMS is one of my BGAs I work with. I basically handle all the way from Maine down to Virginia. And today, I'm going to mainly talk about the life product portfolio that we offer. And I want to talk, before I get in, I want to talk a little bit about Protective very briefly. I want to talk about Protective Velocity. That's my end-to-end suite of digital capabilities. And that deals with electronically submitting an app all the way from app submission to the actual commission payout and how that can help expedite processing applications. So briefly, Protective, who we are. We're one of the largest life insurance carriers in the world now. We were bought by Dai-ichi Life, who's based out of Japan. We have in either 13 or 14. So we're, like I said, we have their backing now. They wanted us to get into the U.S. market. So that's kind of the background of who we are. We're AA minus, S&P, AM Best A plus, Fitch A plus. So very strong ratings. Been in the business for over 100 years. So a lot of strength and in history with our firm. So Protective Velocity, again, this is my end-to-end suite of digital capabilities. So you start off the Easy App drop ticket platform. That's the way you're going to submit the app electronically. The Tele-Life process, I'm going to get into that in a couple slides here. The Plus, that's my accelerated underwriting program. Talk about that as well here briefly. Do have e-signature capability where the clients, the agent can sign everything electronically if they want. And we also have electronic policy delivery, EPD delivery, if the client does want to do this. That obviously speeds up the processing as well. So first thing is, what is Tele-Life? This is an internal group that's part of Protective, so we don't outsource this. And this is basically when you submit an application electronically, it's going to go to Tele-Life group. This Tele-Life group will contact the client. They're going to walk through the interview, obtain all the application details. If an exam is needed, they will order this and follow up on the exam. And you can see the status of all this throughout the process by logging into, if you haven't done it already, but myprotective.com. That's where BGAs and agents, they can access their particular accounts. And you'll have 24/7 online status availability with that. So a quick little diagram here. The agent submits an app. Client completes a telephone interview. If they do not get accelerated underwriting, the Protective rep's going to then schedule the exam. They'll order the medical, APS records, and they're going to request any additional information as well. So they're basically going to be your back office on all of this. And again, you go to myprotective.com if you want to look online and check the status at any time. So Plus, Protective Life Underwriting Solution, that's my accelerated underwriting program. You don't have to do anything special when you submit an app. As long as they are within the range group and you submit electronically, or there is a paper Easy App worksheet is what it's called. It's like 4 or 5 pages. You can submit that as well. But as long as you submit one of those 2 ways, if they're eligible, we will try and do accelerated underwriting. And the way it works right now is 18 to 45 up to $1 million, 46 to 60 up to $500,000. It's available for pretty much any of my products except for the variable. Keep in mind that if you, let's say you have a 40-year-old and we'll technically do up to $1 million, If they already have a $500,000 with us, then they're only eligible to do up to a $500,000. So that factors in any in-house retention that we do have. All right, so now I want to get into my products. I'm going to start with my 2 term products, Classic Choice Term and my Custom Choice UL or alternative to term product. So side by side here, Classic Choice Term, that's a traditional term you're thinking of. Somebody buys a 10-year term. At the end of the 10th year and 11th year, death benefit stays the same, turns into ART. The premium sometimes can dramatically increase. And that's going to be my cheapest form of term coverage I have available. My Custom Choice UL, if you're not familiar with this product, this is a very flexible, pretty unique product. You can customize this via doing step premium designs, and you can also 1035 into this. So kind of a unique product. We're going to get into this here in a bit too as well, more into that product. But my Classic Choice Term, this is really for clients who are seeking affordable short-term coverage, straightforward policy, easy to understand. Again, they buy 10-year term. In the 11th year, they can keep it, same death benefit, but the premium's obviously going to increase. Becomes ART, right? This product is available anywhere from 10 to 40 years as well. So I think Banner's the only other carrier who will go above 30, and we have 35 and 40 years as well, obviously depending on the age. The policy fee, this is an old presentation. It's actually $65 now, but it is fully commissionable. And this product expires at age 90, so obviously it's going to turn into ART at the end of the term length, but they could keep this up until age 90 if they wanted to. They had to keep coverage and couldn't convert. So the conversion options on this product are a bit more limited. The first 5 years, you can convert to any of my products. After that, you can convert to 2 of my conversion-only products, my Whole Life and my Pro Classic Legacy UL. They're both very expensive products. And this product's a bit unique in that you cannot convert the last 2 years of the term. So if you buy 10-year, you can only convert the first 8 years. If you buy 15, you can only convert to max of 13 years. And if you're 20 and above, you can only convert for 18 years. All of this is subject to age 70 as well. So once they reach age 70, it doesn't matter how many years they are into this, but they can no longer convert. Slide's not going forward. Okay, so let's look at my Custom Choice UL now. Very unique product here. First, we're looking at our traditional term again. Somebody buys a 10-year, $1 million policy. In the 11th year, the death benefit stays the same. Annual premium increases. The Custom Choice UL, the way this product works, again, you buy 10-year, $1 million face. The annual premium stays the same. Even in the 11th and ongoing years, the premium stays the same. What's going to happen is the death benefit is going to decrease every single year until it reaches 10,000. So it's kind of like decreasing term in a way. A quick little example here. I have a 45-year-old male, preferred non-tobacco, looking for $1 million face. Now, I talked about the flexibility, the step-level design. This is going to be an example. So if you look here in year 11, the annual premium is $732.33. That's what the price would be if they bought a level 10-year Custom Choice UL. Now, what we use here is what we call a 5x5 design. So this is basically a lower premium for the first 5 years, then a step for the final 5. We see the first 5 years is $606. In year 6 and going forward, it's $910. So the first 5 years lower than the $732. Year 6 and above, it's higher than the $732. Keep this in mind. Where I've seen it get used more often are large business cases where you might have an executive who's 70 years old, 71 years old, whatever, and they only need, could be younger, they need 5 years of coverage. If they buy a 10-year term with anybody else, the premium is going to be quite a bit higher. I've seen this in some very large cases where, again, the executive needed coverage for 5 years, could have been a business owner. We do this 5x5. The first 5 years it's lower, steps up in year 6. They don't want the policy in year 6, they cancel it. They just get rid of it. So kind of a unique design with this product.
Steve, this is John Countryman. Sorry to interject, but That design has worked well with many of the 5-year business loans. We collateralize that loan, and it's really the most competitive way that most of these can afford them. There's no other 5-year term in the industry, so it's nice to be able to customize this custom choice UL with that 5-year lower premium. It obviously intended to be a 10-year product, but I just wanted to interject that.
Yeah, thanks, John. I know you had told me that before, and that's great to hear that somebody is using it, because it definitely is a unique design. So now I want to look at the conversion options, far superior with my custom choice UL. You can convert for the first 20 years or up until age 70 to any of my products. If you remember my classic choice term, the first 5 years only you can convert to any of my products. The remaining years, it's 2 conversion-only products. So now I want to talk about one of my newer products. Came out in March of last year. It's called the Lifetime Assurance UL. This is my GUL, really one of the lowest cost GULs in the industry, and there are some unique features with this product as well. So issue age is 18 to 85, although currently due to COVID, we're not issuing anything above age 80. And at 75, they can still get select preferred. The lapse protection feature, it's the minimum, the greater of either 20 years or age 90. So if you have a 75-year-old, they've got to guarantee to stage 95. They have to go at least 20 years. The target, nice and simple, it's going to equal whatever they're paying the annualized level premium amount, so there is no need for a rolling target. The uniqueness of this product, there's an ROP feature. Starting at the end of year 10, they can cancel at any time and get 25% of the premiums paid returned to them. The uniqueness of this is almost anybody else has an ROP feature. You have a 60-day window, and it's at a certain period of time. So one of my other products, I'm going to talk about this as well. So you got to remember that particular year. You got to remember within the 60-day window. I don't know who's going to remember if they buy a policy that you have 60 days to get the ROP. Again, mine, end of year 10, at any time they can call up and do a 25% ROP. It is available for all issue ages. Has to be non-tobacco rating, no higher than a table 4 or $5 flat extra. So we go all the way down to $50,000 in this product. Now they're only going to be eligible for a standard, either tobacco or non-tobacco. Rate bands start at $100,000. Obviously, select preferred and preferred are available. It's rate band at $250,000 and one at $1 million. So I want to look at an illustration on this product if you haven't seen one yet. So I have a 65-year-old male, standard non-tobacco, looking for $1 million in coverage. So we look here in the middle on the ledger page. It shows us how long we're guaranteeing to age 100. I show end of year value. So end of year 10, you could cancel, get 25% ROP. You could get $64,000 if they want to get out of the policy at that time. Guaranteed. It's going to show you every single year, all the way to age 100, what the ROP feature is or what the ROP amount is. So we see at year 100, they could cancel, get $224,000, which will be work out to 25% ROP. Now we see what happens at the end of year 100. If they're still alive at 101, it turns into basically kind of like an ART in some ways. The premium jumps up to $704,000. I don't know who would keep that, but we see the premium jumps dramatically higher at that point. This is a unique part of the illustration, this level premium comparison. So again, we guarantee to 100, shows us that premium $25,632. It'll show you for any of the premiums at later ages, so 105, 110, 115, 121. You see at 121, it's $26,580. So really, to go from 100 to 121, it's about $900 more a year. So if somebody felt comfortable, said, I want it greater than 100, I'm going to live longer than that, you can see that even going to 110, it's what, about $600 more. So not dramatically higher to go from 100 to 121. The one part I think I did miss on here earlier was it is capped off at 50%. The ROP is capped off at 50% of death benefit. Can never be higher than that, the adjusted death benefit. Okay, I'm going to talk about my Advantage Choice UL. So this is my older GUL. And this is a product with a bit more flexibility because the lifetime assurance UL is a life pay only. You also cannot 1035 into that product. You can't customize. If you want to customize or 1035 into a GUL, you're going to look at my Advantage Choice UL. So this product has strong guarantees, competitive premiums. We did have a reprice recently on this due to 7702 rule changes. And in general, they increased about 3% on this product. The flexible premium options, this is where you can do step designs. You can get very creative with this product, kind of like my custom Choice UL, where I showed you earlier. The first 5 years, you paid a lower amount. Next 5 years, you pay a higher amount. You can do the same thing with this product. You can get very creative, do step designs, etc. You can also 1035 into this product. There is some cash value in here, not much. It's a bell curve, so it starts at 0, it increases. And generally around life expectancy, it starts to decrease, so there's very little cash in here. It's really, like I said, a straightforward GUL. Last product I want to look at is my Indexed Choice UL, my IUL. This product also recently had a price adjustment. It changed a bit from what it used to be. It used to be more of a GUL with an index kicker. You could guarantee it up to age 100. So like I said, it's really a GUL and had index features, right? So the potential for cash values with guarantees up to any age you wanted to, really. My new product that was recently repriced, you cannot guarantee it anything longer than age 90. It's really geared towards cash value accumulation. That is the key with the new product. So you get a guaranteed age 90. It's longer than life expectancy, gives you above that. Compared to our competitors, the guarantee is still very strong. However, it's really geared more towards cash value accumulation and to compete against the carriers that have more cash accumulation IULs. Also does have an increasing death benefit as well. And we also do have guideline premium testing on this, where the old one we only had CVAT. My products, like all of them, really low policy expenses. We use practical illustration rates on this product. 5.17 is the current illustrated rate. And you have the potential to have more cash value, and you have some guaranteed protection similar to a GUL. Like I said, maximum of age 90 with this product. Interest crediting is going to be based annual point to point off the S&P 500. Obviously, it's an IUL, so index crediting can never be lower than 0. And they have access to any future potential cash flows that they may need due to expenses or any other costs that they may incur. The benefit of having an IUL, right? So again, linked to the S&P, 100% participation rate. We have an 8% cap rate, a 0% floor. And like I said, currently we're illustrating a max rate of 5.17, which we use a 20-year look-back period. That's all I have. John, do you want to open it up to questions?
Very much, Steve. One question was whether or not you have a VUL, and I'll let you answer that question, but it is available through Underwriters Marketing Service. Although we focus on fixed products, we do have access to the VUL. Any points on the VUL, Steve?
Yeah, we do have a VUL. It's a cash accumulation type VUL, very competitive with some of our competitors. It's called the Strategic Objectives VUL. Very limited guarantees. It's really there to compete against cash value accumulation VULs. And we had a price change on this one recently. So we're seeing, obviously, with the 7702 rules, minimum non-MAC DB designs look very good now because you can stuff more cash in them, right? Because guaranteed rates have gone down. So you can put a lot of cash into this product. And like I said, against my competitors with similar, if you use similar interest rates, we compete very highly against them. But that's the one VUL product I have, Strategic Objectives VUL.
Great. Another question was, do you have any underwriting sweet spots?
Well, I would say our sweet spot really is we use 2 manuals, Swiss Re and Gen Re, so we can kind of bounce them off each other. We can choose between the 2 of them, choose what's better. That sometimes helps with dual comorbidities. So if somebody has something and they're comorbid, we can look at both the underwriting manuals, and generally one of them will give us a bit of a better offer. I always say we're protective. You know, are we aggressive like some other carriers? No, we're not. We're more conservative in that regard. But we've been around for a long time. We've bought over 60 blocks of business from carriers like Lincoln, from AXA Money, carriers that sometimes give underwriting ratings or offerings that they maybe shouldn't. But then they have to get rid of them because they're not profitable. We buy them. We've done that throughout, like I said, throughout our history. So long story short, we're not as aggressive as some carriers. We're going to be fair. We're going to make you dot your I's and cross your T's.
But we've seen very good offers from Protective, as well as even sometimes a standard to preferred program has also helped. So we really look forward to discussing any of your cases that might have a little impaired risk on them. Of course, our underwriting department is glad to quick shop them if you need to. We're looking forward to seeing your counterpart, Steve, at our annual sales symposium on October 19th, live in person. We're anxious to welcome Chris Solomon, the external wholesaler with Protective. I just want to make sure anyone that's worked with Protective realizes that they try to make the ease of business a priority for the producers and brokerage. Not just the electronic submission platform with all the electronic signatures, electronic delivery, but from any underwriting questions, sales design, we're a great partner to have. I think you're a little bit under enthusiastic about how competitively priced your products really are, Steve. Our producers do utilize the website, www.callums.com, and they see how often Protective is ranked in the top 3 of the quotes for the terms, ULs. If you don't have access to the software or WinFlex program, please do call 800-524-1774. Toy and I on this case design team are anxious to help run illustrations. If you need help getting contracted, get on their website yourself and utilize all the tools Steve was referring to. We'll be glad to help you do that as well.
Hey, John, sorry. Steve, I have a question for you. Would you be able to touch on the accelerated underwriting for our agents?
Sure. What do you want me to talk about in more detail?
Just a little, if you could just review it one more time with them.
Sure. Yeah. So again, it's age and dollar amount bound. So 18 to 45, you can potentially do up to $1 million. 46 to 60, up to $500,000. And like I said, remember, because as I stated earlier, we bought over 60 blocks of business throughout time. Anything we have internally retained, that will obviously lower the amount I'm telling you, like the $1 million up to age 45 and 46 to 60 up to $500,000. And like, you don't do anything on this. It's available for any of my fixed products, not available for variable. Any of my fixed products, as long as you either do the drop ticket or the easy app worksheet, we will automatically try and do accelerated underwriting on them.
Okay. Nothing specific like that's going to knock them out that you know offhand, or?
Well, it's a general knockout questions. I mean, it's generally if they're a smoker, they're going to be knocked out. If they've been table rated with us before, or if they've been table rated in general, they're probably going to be knocked out. I mean, it's your normal, certain type of cancer, certain type of heart disease, cardiac issues. If they're major cardiac issues, we're going to be like the other carriers. And if they're getting knocked out of there, they're going to be knocked out with us.
Right. So do you have a sheet that just like a one-pager that you'd be able to send us that we'd be able to give to the agent so that they know that would knock the clients out?
Yeah, it's in my Plus marketing guide. I'll send it to you again if you don't have it, but it's in the Plus marketing guide. But I can send it over to you. And that has
okay, that'd be great.
Yeah, we'll be glad to get that out to everyone. Some of the underwriting guides you can find on our website automatically. Many of the other guides, professional guides, marketing guides, we can have sent out to you. So That was a good point, Tori.
Yeah, thanks, Steve.
Well, thank you for all your time, Steve. Do you have any closing remarks?
No, I don't. Thank you for the kind words. Really appreciate that. And like I tell people, we have excellent pricing, and sometimes we might make, like I said, we dot our I's and cross our T's. We might take longer than some carriers who might give you better. They might give you a better offer, but always run. Have John, have Tori run the numbers, because I see times where I'll have a standard and Lincoln or somebody else have a preferred, and I still beat them in pricing. So pricing of my products is excellent. Like I said, the underwriting, we're fair, we're conservative, we're going to be fair. We are going to dot our I's and cross our T's, but give us a shot. And, John and Tori are excellent partners to work with, and we're here to help you, and we appreciate your business.
Thank you very much, Steve. Thank you all for joining us today at Underwriters Marketing Service. Don't forget to call 1-800-524-1774 for any protective life quotes, as well as visit our website, www.callums.com. Call UMS.com. Thank you kindly, everyone. Have a great day.